This is a great question I'm often asked during consultations with clients who are ready to change their lives with my family banking concept, but just don't quite understand all the details and inner workings of this powerful program. I know many of you have the same question, and I want to help clarify it so you can make the best decision for yourself. So, what is the difference? Term life insurance provides only a death benefit. There are no living benefits associated with term life insurance as there are with whole life insurance. And in order for your spouse and your children to realize the death benefit, you must, of course, die. Less than 1% of all term policies ever pay a claim. Now, I'll say that again. Less than 1% of all term policies ever pay a claim. Now, this is because almost everyone who owns term life insurance is forced to either convert their term policy into a whole life policy, or they must let their term life insurance policy lapse, because as you become older, the premiums for term life become prohibitively expensive. So the word term refers to your possessing death benefits for a brief term, or a short period of time, usually while you're relatively young. Term life insurance can provide you with a large death benefit at a low monthly premium rate, especially if you are young. And for this reason, I advise nearly all my clients to own a life insurance policy that is a mixture of both whole life and term life insurance. Having term insurance is similar to renting a home or automobile, whereas owning a whole life insurance policy is like owning a home or automobile. With term life insurance, you have zero equity. There's no cash available in your policy, and the policy has no value to you or to your family unless you die. Whole life, or permanent life insurance as I prefer to call it, is coverage that protects you for the duration of your whole lifetime. It's similar to term life in that it provides a death benefit, but unlike term life, whole life also has several living benefits, and this is the good stuff. You get the benefits of insurance protection along with a guaranteed built-in savings account, meaning your policy is guaranteed to build cash value that you can either withdraw or borrow from throughout your lifetime. The premiums are higher than term, but they will never increase as you get older, as with term insurance. And unlike term life insurance, your whole life insurance policy can never be canceled on you, despite how poor your health might get. The longer you have it, the more value it grows in guaranteed earned interest, dividends, or both. With whole life, the premiums are higher, even when taken out in your youth. You are guaranteed access to a growing cash reserve as part of the whole life policy, and that's what makes it special. If there's a loan out at the time of your death, that amount is subtracted out of the amount paid to the benefactor. That guarantee, among others stipulated in the policy, makes whole life a wonderful investment for some people. But you have to know what you're doing. It's not just any whole life policy that will get you the desired returns, rates, and ability to access cash, which is what makes this a truly beneficial investment. In other words, you have to understand whole life and all of its terms and language. So here's what you need to know. With a whole life policy, you can save up a college fund for your kids, use it to finance business expenses, pay for emergency surgery or medical bills, invest in your business or build a new empire like Walt Disney did, enjoy retirement and not worry about market crashes or its fluctuations, have a reserve emergency fund, pay off your debt. You pretty much do anything you want with it with no questions asked. It's known that Wall Street has lost more than 45% of the typical investor's money twice over the last decade. Simply put, the only money you should put into the stock market is money you don't mind losing. So many investors put all their faith and their trust in the stock market, real estate, commodities, currency, or mutual funds. And doing this can be very risky. So my advice is to invest conservatively. And investing in the stock market is not investing conservatively. Instead, put your money in products that have guaranteed rates of return, and a properly structured whole life policy fits the bill perfectly. You can earn guaranteed interest as well as annual dividends, while at the same time you're providing a monetary benefit for your loved ones in case of your death. But be careful. Choosing the wrong kind of insurance can be damaging to your financial plans, so you need to plan wisely. You have to know what questions to ask, and you must find a good and reputable person to ask. So if you plan on keeping your insurance for more than 15 to 20 years, permanent or whole life is the way to go. Now, we can help you assess your needs and get you just what you need. Visit us at www.familybankingspecialist.com for more information on how you can grow your wealth through your life insurance policy.